Hello, welcome to the weekend stock market review. It is Sunday, March 26th. I still have a lingering cold from my trip to New York, but I'm getting better slowly. Still have a little congestion and a little coughing here and there, so that might happen during this live stream. Anyhow, I don't expect anyone to show up, but you can watch it later. Right off the bat, um, I think the Fed did what he had to do. Um, I'm not a big fan of the Fed, never has been. I think the Fed has been behind forever, not just Powell, but you can go back all the way to Greenspan, Bernanke, Yellen, you name it. As long as I have been following the market, none of the Fed has been at the right spot as far as being proactive. They have always been reactive, and that has always been the problem. And after decades of being behind, they still can't figure out how to look at the data and not emphasize so much on back data. It is ridiculous. It is so antiquated in how they look at CPI, look at all the economic data. It is so antiquated. It is disgusting. It is shameful. It's baffling on how so many academia, PhD, economists, you name it, so many people fail to look ahead at the data, fail to interpret the data and use forward-looking data instead of backward data, lagging indicators, and keep making decisions based on lagging indicators. It is nothing short of shameful. We are talking 2023. It's time to move on from centuries old bad data analysis. All right, so TLT did what I thought it would do. A lot of what happened during the week, last week, did not surprise me because we had a market that ran up into the Fed, right? It ran up looking at the problem with the banking crisis. So the market baked in the banking crisis, baked in that the Fed had to pivot, and pivot he did. Even though personally, I felt the Fed should have not raised 25 basis point and just went with the statement that they did as far as ongoing. They removed the word ongoing rate increase, ongoing tightening, because they know the banking sector is in trouble and they need to backstop any potential failures. So the printing machine is turned on. So for me, 25 basis point is more of a safe face kind of move, which I understand, but I don't agree with. Anyhow, the market reacted pretty much the way I expected. Yellen scared the market on the same day when she started to talk nonsense about how the deposits are not guaranteed across the board. Nonsense. That woman is a fool at best. That's about as nice as I can say it. She's a fool. Ah, unbelievable. Anyhow, I bought into TOT on the dump below 105. That was a no-brainer, right? And of course, I held on to all my share. I wrote cover calls during the dump and the bounce. I wrote cover calls from 108 all the way to 110 because I would be happy to let go of some of those shares if they went that crazy. I was ready to take some profit and then reload. So what I have been doing is sell puts. I sold some puts during the dump, bought some share, and then on the bounce, I sell cover calls, right? So I sold 5 cover calls and 2 of them already expire last Friday, and actually three. Three expire last Friday, well, 2 days ago, and then 2 will expire this coming Friday. But the strike price is 109.5 and 110, way above. I would gladly take a 5% gain kind of move, or 4.4% ish. All right, so I like TLT here. Buy the dip toward the 50-day moving average. So anytime that I see TLT get anywhere near or on the 50-day moving average on a pullback, I'm buying the dip. Okay, that's the strategy. As far as selling put, I'm selling 104.5 all the way down to 103. I think the day that we see 102 might not happen in the near future. Can I see TLT pull back all the way to the gap fill? Maybe. That would be about as low as I can see going forward. I make a statement last month that I think the day of TLT going to below 100 is gone based on the data that I see, and I'm sticking with that. Okay, anything between 105 and 103 is buying in size. No brainer. Easy decision. As far as the bank, I did not add to Bank America. The dust is still not settling. I like Bank America. I would like to add to it, but for now, it just need to weather the storm, and I will add to it. I like Bank America. Let's see, compared to JPM, which also have a harsh pullback, barely hanging onto the 200-day moving average. So if that fail, do I think, is there a chance that JPM come down to 110? If it does, buy in size. Okay, I like JPM down there, but it need to get all the way down there. As far as Goldman Sachs, I have a small position, and I'm not adding to it. The entire sector can provide a huge area of gain should we stabilize in the financial sector, and Goldman Sachs is one of them. My top two picks is still Bank of America and Goldman Sachs down here. I would like to add more to Goldman Sachs. I would like to sell more puts and put spread on Goldman Sachs down here. Where would I sell it? 285. Okay, I won't sell any puts above 300. But on further weakness and pullback, instead of adding share, I would add share if I see a stabilization in Goldman Sachs. But I would rather sell put at 285. If there are enough juice at 285, between 280 and 260, sometimes some kind of put spread down there, I like it. The risk reward is selling put and put spread down here between 285 and 260. There's a lot of protection above. Okay, at this point of the game, if you're going to sell puts or sell put spread for income, you have to do it way below, because it's a tough market. There is no need to be greedy and grab another 50 cents, 25 cents, and then put yourself at risk. One of the area that I bought and sell put heavily on a dump was healthcare. Wow, right? What a crazy week. That was a crazy move right here. And if you was not a chart reader, if you don't care about TA, if you don't care about, using chart at all, because you are all fundamentalists, well, guess what? You think it was a random spot that ELV came down and then bounced? No. Okay? Reference low. This is the area. So on this day, on Thursday, one of the ugliest day that ELV had going back 2 months, I bought, share, and sell 3 put spread down here: 440, 420, 435, 415. Way low, way below. I sold a total of 8 put spread between ELV and Lockheed Martin. We will talk about Lockheed Martin later, but for now, I like ELV here. On further weakness, again, if there is any kind of dip back to the reference low, would I sell more put spread? Yeah. Where? 430 and below. Okay, way below. Just use this right here. Use this downtrend, the channel, upper channel is my protection. So I would sell more, say 425, 410. But for now, I'm okay. For now, I have some share, a small amount of share, and then I have three put spread that are expiring Friday in the range of 435, 420. So it's okay. They should be okay. But I gotta keep my head on the swivel there. Now Lockheed Martin, the same thing. There was a fairly decent pullback to support. I bought some share. I sold some put spread as well. Where? 450, way below 460. Okay, I did 460, 450, 460, 435, 440. Yeah, I sold a bunch there as well. And so I have, I think, one or two that expire Friday, and then one or two that will expire this coming Friday. So I like both. I will for sure add more share of Lockheed Martin should it come down to the 50-day moving average. I would do that. Anything in the 468 area, I wouldn't mind adding a few share here and there. All right, I liked it. Eli Lilly had an ugly move, and I'm glad I held my nose and bought a bunch of share. I trimmed a little bit on the bounce, but just 10% of my holding. And for now, I'm holding everything so far, except for trimming 10% on the move up. Where do I look to sell? Up here, okay? For me, I'm gonna watch that 100-day moving average very closely. If I see anything near the 348, you betcha I will trim probably 1/3 of my remaining position up there. Gotta do it, okay? Last time it got there, pretty ugly rejection, okay? It was support barely here, and then rejection, and it had been one ugly move. So yeah, next time I get up there, I'll sell at least 1/3 of my remaining position. All right, so keep that in mind. I'm gonna put an alert right here so I don't miss it. I'm gonna put an alert right at 347-ish right here. Create alert at or above. Trim. Right, so I don't miss it. Pfizer finally stabilized after one ugly downtrend. What would I do? Regardless if I would be losing a little money, I would trim on the 50 MA. Gotta do it, right? Stay disciplined. The target, of course, for me, I would love to trim into the 50 MA should there be a rotation back into big pharma. There was one ugly rotation out of big pharma, as you can see this ugly 3 months trend. But if there's a reverse of money flowing back into big pharma, then can I see Pfizer get back to 46, 47? Yeah, that's where I would exit the bulk of the share. Okay, I would trim a little bit here just to be disciplined, but looking to sell at least a half up here, if not 3/4, and then let the rest ride, right? At least I will be in the profit there. There's a lot of pharma, biotech that got beat up. Look at Amgen. A lot of big pharma and big biotech chart look very similar, right? You get this ugly 3 months downtrend, but it's stabilizing. If you want to buy the dip using 227 as your backstop, you can do that because I think it's been here, okay? This has been a good spot to accumulate Amgen. If you like Amgen on a pullback, you can nibble. Or if you want to play safer, sell put. Where? Use 225, 215, or 220, depending on what kind of premium you get. But to me, 220, 200 put spread might be a very quote unquote safe play for Amgen if you want exposure there. J&J, same. Look at this ugly chart, right? I think if J&J goes sideways a few more days and then the 20 MA come down a little bit more and then flatline, I think that could be a good play for the rip above the 20 toward 160. So to me, I'm watching it closely for an entry. I don't have any right now in J&J. I've been watching it since it broke down last month, and then I'm liking it here in the low 150s because I think this could be an easy hurdle for your JNJ to go over the 20 and get 160. So it could be a $7, $8, a 5% potential move up to trade JNJ. FV, no position. I would think if you have FV, use this channel low as your stop, or there's a couple spot. You can use that, or you can use the 100 MA as your stop, but you should have your stop there, because if it get out of the channel again, then you can see something way down here. Okay, it's FV is not cheap. It's definitely well owned by a lot of big players, so it's stability there. It survived a lot of ugly move compared to J&J, Amgen, or Pfizer. It held up better. Let's take a look at another one that was hot, and it's bouncing just like Gilead. Same thing. A couple of the hot biotech did very well. It survived the dump much better compared to like Amgen, Pfizer, J&J. Gilead and Biogen certainly weathered the storm better. I don't have any position right now in them. I'm watching them closely, but no need to chase. No need to chase. Let's take a look at big box. Costco. If you bought Costco on a dump, well done, but I think it's time to go. All right. For those that bought Costco below 480, good on you. But you get your move, right? You get your 5% move. Now you're gonna face resistance up here. So if you still have some, put a sell order at 497 up there. Okay, to me that's the spot. All right. The last time, nasty wick right here. See that? That's a nasty rejection right there, and then a second one almost just as nasty. So there is something about the 200-day moving average that has rejected sharply twice already. So don't make it the third time. All right. So put a sell order up there if you have some shares, so that you can at least take some profit up there. Can it break it and go higher? Possible. What's the reason? I talk about Costco many times. The growth trend is slowing. I don't care what Kool-Aid you want to drink about how great Costco is. It is a great company, but it is expensive on a fundamental analysis, and then technically it does not look very healthy. This is a pretty weak downtrend over the past year. So don't drink the Kool-Aid. Do not do it. I like Target a lot more here. To me, Target is the one that I wouldn't mind. If Target have another good candle tomorrow, that might be a spot for me to buy back some share that I sold up here in the upper 160, low 170. I would love to buy back in the low 150s or mid 150s, right? So I like Target here. Would I sell put spread? Yeah. It's not a lot of juice there, but for sure 150, 140. Walmart, I like as well. I like Target more, but Walmart, where would I buy it? Down here, 139, 138. I would accumulate. You just have to watch the 100 MA as potentially a resistant, because like I said, it flirted with that a few times and then it give. Okay, so that might be a tougher resistance this time, because it was a very weak support last month, going back 6 weeks, right? So just keep your eyes on Walmart. Out of the three big box, I like Target the most, and then Walmart next, and then Costco is my least favorite of the big three. How about defensive play? Pepsi, I'm out. I'm out, okay? I got out. If you still hold Pepsi, good luck. I think it is at the top range of where it can go. Now, can it break this and then get up to the all-time high? It's possible. But really, you're talking $6, $6 or $7 higher, right? Not a whole lot of excitement. To me, would I buy back my Pepsi? Down here, 173 and below. Where would I sell puts? Maybe 170, 165. Okay. The risk reward is just not all that exciting here with Pepsi. That's why I'm out. Coke, I still have, but I'm watching closely. Okay. I almost pulled the trigger up here. I just missed it. I put in an order, but a little bit too high, about 5 cents above where it topped out Friday. But anything over 61 on Monday, I'm likely trimming some. Anything over 61, for sure, between 61 and 61.2, I will be trimming some for sure. How high can it go? Can it get up to 61 and a half, 62? Yeah, it's possible. Do I see Coke up at the all-time high? Why? Why would Coke be at the all-time high or 52-week high? What's the reason? None of these staple companies are cheap. From Coke to Pepsi, that are expensive, but they are staple as far as earning. That's why there are money flow into this sector, but they're not cheap. Okay, so no. Mondelez had been stubbornly high, shockingly. Okay, shockingly. Out of all the staple play that I had been trading the last year, this one didn't come down. I was looking to buy in the low 60s. Never got there. On a pullback. Okay, it didn't get there, and now it's at 52-week high. It's time to go. If you have Mondelez, it's time to go. If you don't, I don't know what to tell you. Let's take a look at some cybersecurity. It's time to go on Palo Alto. If you have it, it's time to go. I wouldn't buy it here. At the minimum, raise your stop. Use the low of you can use the low of any one of these 4 days last week, okay, or use a 20 MA. At the minimum, use the 20 MA as your stop, okay, at the minimum. CrowdStrike, same thing here. At the minimum, use a 20 MA as your stop, but I wouldn't be chasing it here. No thanks. I like the sector. I trade the sector many times, but as far as Fortinet, it's the one that really should go. Okay, look. It's been here many times in the past year. Many times. Okay, many times. Do you think, what's the reason that this time will be different? Is there any reason that it can push it higher? At the minimum, raise your stop to the low of Friday. At the minimum. If you want to use a 20 MA, you can. But to me, it's time to go. Time to trim, time to take profit. All right, let's take a look at energy. Not a surprise that energy is weak because the fear of the recession. I talked all of last year that USO can trade in this range of low 60s to low 70s. That's fine. But if we have a recession, say hello to the 50s, right? It never failed. I don't care how the world economy is. If we are in a recession, energy will crash. It has every single recession. All right, so it's not going to be different this time. I have a couple USO put, which is fine. I'm slightly losing money right now in them because the strike is 61, but that's okay. I don't mind taking a loss Friday if that's the case. But for me, it's a tough area to be in right now because you just can't be bullish on energy when the economy looks like it's going to go into a recession. That's why Oxy got weaker. I think it's safer to buy Oxy at 58 and below, but you got to sell up here. Okay, if you buy Oxy, You can sell anywhere from the 20 MA to the 50 MA. You gotta. I find it difficult to think what would be the catalyst to move Oxy to say 64 or 65, the upper range of the moving average, the 200-day, the one. What would be the reason? If it got there, sell. I would buy puts. I would go short on Oxy if Oxy get up there, because I like Oxy, but not in a weak recessionary environment. Okay, energy is not gonna be like, can't fight it, right? I was talking about transport. They are getting interesting. I like CSX the most. I talked about that last week, right? But if we are in a recession, transport will be weak. Okay, so just wait, patiently wait. You might be able to buy CSX down here in the low 26. That's where I would buy some. There's not a lot of premium in the puts. It's not worth selling puts there, but I do like CSX down here. Same thing, JBXT. Okay, I like it here, but if we have a weak economy, weaker outlook, can I see JBXT down here in the 155 range? Yeah, that's where I would buy a little bit. Okay, I would definitely not touch UPS, not up here, no way, no how. Okay, rejection, rejection, rejection. If you didn't sell up here, I'm not sure what you're waiting for, because what's the reason to be bullish on UPS if we are in a recession? You think people will buy more online? I don't think so. Same thing with FedEx. Crazy move. I don't like it. I don't like FedEx here. I can see this thing fill the gap in a hurry if the market sell off on a recessionary fear. So no, I like FedEx and UPS the least. I like JBXT and CSX more if I want exposure in transport. The one sector that I like a lot that is stabilizing, I've been waiting patiently for LabCorp, and it's down here. I would love to buy it lower. I have not buy any yet. I've been looking to buy. I've been throwing out orders out there, but I just keep missing it, which is fine. I will keep throwing out orders in the 210 area. Should there is a wick down there, and I would add some share at 210 all the way down to 200. That's what I would like to buy. Patient, okay? I like the sector, and I patiently waited to see it pull back. It did. More than 10%, all right? It was an ugly move. But as you can see, when LH pull back, it can be a 20% kind of move easily, okay? So yeah, we're getting there. Can we get down to almost 200? Yeah. If there's a market sell-off due to recession fear, there's no reason to stop LH to not revisit October low. There's no reason for a lot of stock to not retest October low. Okay, same thing with DGX, one of my other favorite. What a crazy bounce. I'm staying away right now. Okay, for me, 130 down to 125, I would love to buy. Even lower down to 120. But for me, for now, I like LH more than DGX for sure. Let's take a look at budget FANG before I go. Let's see. First up, Microsoft. Time to go. It is time to go. I don't. Yes, there are flow of to safety, because people are so fearful of banking that right now some of the safety area is big tech. So be it. But if there is a stabilization in the financial sector, or the Fed says something that contradict what Yellen said last week about backstopping deposit and the bank stock bounce, you think you won't see money flow out of safety big tech? There will be. So for me, it's time to go. There's nothing here. The risk reward is not buying in. Not for me. Google, same thing. Would I look to trim? Yes. If I see Google I like Google more because it got beat up so badly. So I have not sold any Google yet. But if I see Google breaking 107, 108, I would sell for sure up here at the 114 area. I would trim for sure. How much? Maybe even 25%. Meta, same thing. I wouldn't add anything here. If anything, I look to trim up there, okay? Can it get back to 236, 237, 52-week high? It's possible, but first up, it need to get to like 224, right? What would I do with Meta? I would probably raise my stop to say around 200-ish. Okay, it's kind of in like a no man's land. It's very tight range every day. It's not like a big range, so I don't want to put a stop using low of day Friday because in any moment on Monday it can blow by that stop and yank the share from me. So for me, I'd rather use something like 200 as my stop. At the least, use the 20-day moving average as your stop if you really want to have something. But to me, the gap fill is 183. That's where I would add some share. If I want to add share, is down here at the gap fill, right? There's no reason to chase it up here. Would I add on a 20 MA? Maybe. But for sure, I would add on the gap fill and add more down here if it even get down there for whatever reason. I haven't talked about Tesla in a while. So Tesla, if you have Tesla, I hope you have a sell order up here. Okay, it's a look. The last time it got to 214, 215, it sell off, right? And now the 200-day moving average is coming down quickly, so it might get there. So if on any pop, if you see 215, 216, get out. Take your profit, trim at the minimum, trim some, right? No brainer. Would you, if you want to buy, maybe put an order down here in the low 170s, right? Use the 100-day moving average as your target. If you want to sell puts, perhaps sell put in the 160 and below. Do a put spread like 160, 140. But right now, the risk reward is not chasing Tesla. It's like either wait for a pullback to the low 180. If you want to nibble, add more to 172, or sell put at 160 and below, right? No need to chase it. But if you long, trim into 215, 216. Let's do one more before I go. Let's see, what else should I do before I go? What about, oh, I've been looking at Lulu. I did try to sell a put spread down here on this dump. I like this range here. If you watch Lululemon, for sure, anything between 283 and 290 is a potential area to buy some trading shares. That's a good area. It has bounce and support for a while. Sure, can it break? Absolutely, it has. There was a 2-month span where it broke that, but it bounced nicely since and then retested. Right now, no man's land. No need to chase it here. No need to chase it here. I wouldn't touch it, but I watch it closely. And lastly, OTA. OTA. No touch, okay? I was short OTA and I closed it out at a loss. I had a bearish put spread with 500 as my target, but of course OTA has been uber strong the last 2 months, so that was one losing bear put spread there. Would I sell put spread if I see the high? Yeah, I might do the same thing. If I see a high again, it's crazy. I would probably try another go with the bear put spread. But as far as buying the share, if I wasn't trying to go long, if there's a dump in OTA, I would probably rather sell 475, 450 put spread down here or 460, 440 put spread, something down here, using the 100 MA is my protection above. Okay, so Ulta's good, but it is quite expensive. And that's it for this week. I think we're gonna be okay as far as the market. We just have to go day by day with the economic data. And for now, I do see cooling inflation as far as the next few weeks data. Certainly, the end of January, I was not surprised to see such strong economic data for January, but February has changed. The market has changed, so I do expect to see weaker economic data showing up the next couple of weeks. And if that's the case, the Fed will likely be more inclined to pause. And that's what we want to see, a pause by Powell. That's it for the week.